Hey folks, welcome to Wednesday the 9th of March. We're about 9:51 a.m. here in Dublin. And what we've seen this morning has been a nice little push back up on equities. There generally, over the last 30 minutes, there generally seems to be a little bit of softening coming in across the board on the risk tone. You're seeing the bonds coming off here as the Russian foreign minister says foreign ministry says aims of its operations do not include the overthrowing of the Ukrainian government. Now, can we believe that? I don't think so. But is the market taking a little bit of risk on that? Yes, it is. We're seeing T notes down here. I'm going to get over onto these charts and show you what we're looking at here. So T notes coming off, we're down about 0.26%. Back in to close the gap in this yellow area here down the bottom right of your screen. I'll just blow that up so you can see that a bit better here. Really in confluence in the bottom with S2 and 126.16 and a halves. Could we go further down? I don't know. I'd rather wait and see the gap close here. First of all, just now as well on the energy front, we've seen oil just spill down on the back of this comment. There's further comments coming out here from New Squawk. My trusty Squawk would never trade without this. Russian Foreign Ministry says the US needs to explain its biological programs in Ukraine. All right, we're not going to take anything from that, but oil has made a hell of a pullback back to the 121.33s, top of this gap area that has been closed. But you can see now why I like to track these gap areas for a couple of days thereafter or until we really make a move away from them. Yesterday it was around on this candle with the arrow about 1 o'clock that we started to hear on the Squawk from the guys in New Squawk that the Biden administration was going to ban the imports on Russian oil, gas, natural gas, and oil, gas, and LNG. Okay, now not a huge deal because it only represents 3% of demand. However, we did, there was a couple of people kind of trying to play this down on US media, like on CNBC and Bloomberg, saying, well, it's only 3%. Well, you know what? We went bid from 121.33s up into a high of 129. So, just a $6 bid there, no biggie, right? Well, it wasn't priced in. Or a lot of people saying, well, the imports from Russia were down to practically zero, which they were, but nonetheless, there are other impacts to be had across the general WTI trading space than just it being fully priced in. So as you can see, $6 of that was not priced in, and so up we went. Then when it came to the press conference, right? Buy the rumor, sell the fact, right? Buy the rumor here. I like this, right? Buy the rumor, sell the fact. Right here, right? Sell the fact. Okay, This is probably the best example ever of indeed that. Buy the rumor, sell the fact. So we came down here. Biden came out, all done. We flushed out the weak longs, and then again back to just pretty much to the tick. 119s, spot 94s, bid up into the close again. Percentile moves here are pretty wild, as you can imagine. So that pullback back into the high in the closing period, you got a 7% bounce. All right, so we went pretty much from the what sort of percentile figure did we get on the 1 o'clock announcement? Well, we got a high of about 6.9, so let's call it 7% up. We pulled back 7%, actually 7.5%, and then bounced back another 7% to finish the day very strong on oil here. So again, we're down to this area very quickly, came back down, and buyers just loving that, and we've probably bounced almost $1 so far on that. We're just kind of weighing a bit heavy on it right now. All right, so just keeping track of these areas on oil. I'm working this area here, generally looking for longs on the top, not putting up with trying to hold this and average in below the S1s here today, and then targeting on the swing push for the 134s above. So not much changing here on oil. If we do break down back through this prior zone, prior gap area, look, 115.22 support. All right. So that's it. You're seeing a pretty buoyant day on Euro stocks and DAX, both up by 3.25%. Um, on the market right now. So we're going to switch over to these US markets, and you can see Nasdaq currently holding up 2% right now. This somehow the market does seem to be pricing in that they're going to believe the Russian ministry now. They're saying that they don't want to replace the government in Ukraine. We've also seen Zelensky overnight talking about how they don't want to join NATO anymore, and that conversation is firmly off the table. Can we believe all of this? Can we come out of the woods? Can the people of Ukraine start to get some respite on the back of these kind of two comments from Zelensky and the Russian ministry? Who knows? But we are definitely pricing in a certain amount of softness on the tone for now. So Nasdaq, I still really find it hard to see us not trading down into the confluence here. 129 03s even, and the 500 day exponential moving average down here would just be all too perfect to get along in here, and then it's all forgive and forget about it. Five rate hikes priced in. Let's just cruise on for the rest of the year. I'd like to believe that, but that it'll be another thing when it comes to taking the trade, right? And what it will be the headline risk at that point. The SPOOs yesterday, tricky one really. Tricky one on equities in general at the moment. So there's a bit of a zone of a range down here that the market does want to drop in and trade across, but you're seeing this morning that softer general tone from the Russian ministry and Zelensky, giving us a little bit of respite here, up 1.6 at market, pre-market for the US. Upside resistance at the 200 EMA. That would be a big day for the SPOOs. So I'm not really too interested in trading this unless we get a clean test back down to 42.12s and hold during the actual market for now. But otherwise, I'm kind of mindful of lower prices here that feels like they need to trade. So, yeah. But for now, look, we're up on the front foot, and gun to my head, I belong this market. Yeah, absolutely. Um, the Dow as well. Let's have a look at the Dow on the daily here. Yeah, so again, it's I'm looking at this area. It's very hard for me to technically see not see this trade, but again, you've got sort of trend support now. It's going to have to break that trend to make it down here. We're up 1.5 at market currently on this on the daily bars. It does seem that currently there is a sort of a pull factor by the 20 EMA here just to get back to a bit of average pricing. And that doesn't mean that this market's going to cruise on to new all-time highs. It just means just averaging back to normalize on the pricing, and we could easily resume the downtrend once we get back to the 20 EMA easily. So look, these are good levels. There's some good levels to look at to go for the longs here, but I'd rather not trade the Dow today. But we'll be sort of looking at the front foot here rather than selling down on this thing. And then what else can we look at? The euro, lovely action on the euro that we've been catching live in the Discord room. So we're looking at this trade as the dollar sort of weakened off here on this general line in the sand above. Getting long on the euro and then playing that long as we push down through. I think we're going to have to fill the gap on the bottom. 98.51's Dixie. Technically, can we push below? There's a line in the sand down below here, but I'm just targeting a gap fill here on the dollar, and then I'll reassess whether I want to hold for the big one on the euro or not there. So really nice, good technical position trades, bit of scalping going on that euro. You see there, just lifting up in its respective line in the sand of resistance, right? Gold getting hammered here as well, so kind of firmly tied to the dollar wagon, and and essentially, actually, it's the bond wagon that it's tied to at the moment. So you're seeing that yield rising even further now, and that softening on the T notes. So that is going to be further softness in gold. It's negatively correlated with the real yields meaning positive correlation with the bonds. So yeah, nat gas, it hasn't lifted, hasn't done it yesterday. Some nice trades from a couple of the guys in the room here off the 20 EMA, getting the bounce, getting out of it, and then it folds back down, sits on this 20 EMA. So really, I'm trying. I'm really actually not getting that excited about nat gas because it's just not playing ball as you would imagine it would over this sort of level of risk right now. So if you do get a general softening on the risk tone for the any expanded violence, I should say, in Russia, or sorry, in Ukraine, you're going to see nat gas come off quite a bit, I would imagine. So you're seeing oil now just breaking down back towards the 119.94 as I speak, and dollar holding on the lows, and gold pressing new lows. All right, so yeah, I think we can do more upside in equities today to just basically sum it all up. I think Euro stocks has been to a very, very cheap area yesterday. I think the same with US equities. So, all right, please do click to like and subscribe. And I'll catch you in the video tomorrow. And otherwise, I'll see you in the Discord room. Have a good day. Bye bye.